So we have a really interesting panel here, and before we get into a little bit of the content, I want to have everybody kind of introduce themselves and tell us a little bit of your expertise, your story, and how your company is involved in cross-border payments and B2B payments in general. We'll start with Luis.
I'm Luis Cambronero. I'm the head of partnership and sales for Asa Finance. I've been in the cross-border payment industry for 15 years already. Did the exit of a couple of startups in the industry, and now super excited about this panel. Thank you.
Excellent. And I forgot to introduce myself. I'm sorry. Alex Pereira. I'm the founder and CEO of PMI Americas. And PMI Americas really is more of a B2B solution, payment solution, and what we've been focusing mostly in servicing other fintechs around the world to pay into where we are a local licensed entity. And currently we do that in Mexico, Colombia, Chile, Peru, Argentina, Brazil, and now Spain as well. And again, I think it's interesting because most of our clients ended up being other fintechs, and in this panel really is about our fintech track. And what I've at least come to realize is that the collaboration of fintechs with each other around the world is what is the advantage of our cross-border payment solution. But I'll let our rest of our panel introduce themselves.
Good afternoon. My name is Sebastian Bonifasi. I am from Guatemala. Can you hear me? Yeah. We founded Invesgo in 2019. In 2019, Invesgo is a fintech where we are on and off ramps for different exchanges and different wallets from the U.S. Basically, we work with Abra and Binance. We're their partners, and we have different cash in and cash out points in Guatemala. Right now, we just acquired the crypto card program with MasterCard, so we are launching our new prepaid card right now in Guatemala, and this is where we want to start with cross-border payments as well, and doing it by ourselves. So really excited about it and excited about this panel.
Fantastic.
Logan Lemberger with MassPay. We are a payout orchestration platform. We work with many of our friends here, payout partners around the world, helping them connect to corporate customers, mostly in North America, but also Europe, that need help to do B2B and B2C disbursements to all sorts of folks, whether that's contractors, creators, developers, all sorts of folks that fit outside of that traditional payroll scope, and allow for payout partners that have expertise in different parts of the world to be able to reach customers that they maybe wouldn't be able to reach otherwise because of their maybe lack of wide range of services. And I've been building digital financial services for cross-border for about 15 years, both consumer to consumer, remittances, B2B and B2C, all at the intersection of digital, highly regulated industries.
Great, great. Well, obviously, I think that it goes to say that with the opportunity that technology has shown, and because this is our fintech track session, I think we are all here because technology allowed for alternative payment methods to exist and an alternative to banking methods. So I just wanted to kind of go over a little bit with you guys, each one of you, to see how technology has made or continues to be so essential in your company, and also how that is a competitive advantage. We'll start with Luis.
Mm-hmm. Thank you, Alice. So I think nowadays it's trying to become more and more important because of the interoperability between all traditional partners. Like we're talking about banks, we're starting to see like with the new regulation also, they have to have like proper APIs in different jurisdictions, and of course between fintechs, we are seeing that this is the moving forward situation with the industry. I still think that it's still a challenge for the development countries to have this infrastructure. I mean, at the end, at Asa Finance, that's what we do. Mainly, our core business is Africa, so we try to do that with Africa. but it's still there is a lack of infrastructure from the traditional players that we can see in Europe or the US catching up, but still in emerging economies, it's a challenge, right? And it really, you can see that it really differentiates between one country to another, right? Like, for example, we know Nigeria, they have a proper switching system where you can connect and do instant payments in any bank account. But then you have countries like all the XOF area, all the Central Africa, that a payment still takes 1 or 2 days because it has to go to France. France has to approve the payment and then go back to the country. It's unreal, but it's still happening, right? So that's where we Fintech has to provide a solution. But still, we are lacking of that part that is the connection with the last mile payment, that is the bank, right? At the end, like, unless there is new payment method that we are seeing in Africa really gaining market share, like mobile wallets. But we are talking here about B2B, right? So for B2B, still the bank deposit is the major payment. So I think in the retail side of the business, we have seen a huge development on instant payments in all over Africa, but also in all over the world. I think for B2B, we're still lacking that because we rely too much on banks yet. So, yeah.
And that's a good point. And I think, well, Logan, for instance, you guys are almost 100% leveraging technology to pretty much connect all the points. So tell us a little bit of how you guys started, or when you saw this opportunity there, and where do you see it going forward?
Definitely started by seeing the challenges in working with direct-to-consumer and remittances, which I know a lot of people have that background, and having to go and find those customers, win them over, and win them over again and again. And that's something that not everyone wants to continue to do forever. And so the prospect of working with businesses, you can win them once and you can nurture that relationship and provide lots of other different types of value. There's other challenges that go along with it, and you need to build the infrastructure to support them, how to onboard businesses, how to be able to present them directly to your banking partners. So the way to use technology to make it a really smooth onboarding process. How could you collect all the information you need to do a KYB or collect any compliance documentation that allows it to be simple and smooth and minimize the back-to-back. So we've invested a lot in that. And then to some of Luis's points, being able to connect to global banking partners or licensed entities is really hard overall, but even just from a technology perspective, everyone has a different protocol or language they prefer or structure for how they build an API that lots of corporate customers just don't have the patience to deal with or figure out. So just packaging that all up into a single integration is a really big challenge and opportunity that we're pursuing.
Yep. And we're mostly, so you guys are connecting through a payment hub, different payout partners around the world that each one has their own license. So you're really in the middle. You don't touch the money, but that's a really good, I guess, position, because you don't have the responsibility of the licensing, but yet again, you do have the responsibility of connecting and make sure everything runs smooth. So tell us a little bit
technology relationship that's important, but we definitely pride ourselves on that. But just because we're not the licensed entity doesn't mean we remove ourselves from compliance responsibilities. We have our own compliance program, and we need to understand whether it's our bank sponsors in the U.S., what's important to them, what do they need to feel confident in onboarding a customer that we're bringing. But also, we're not experts on South Africa or Thailand or Guatemala. You're going to be able to tell us better what it is you need for any beneficiary or corporate to be able to deposit funds in their account. And so you can build technology around those needs and understand in each country, there's multiple different providers, and each of them are going to have a different expertise and preferences for types of transactions. And so we build a lot of technology around ensuring that anyone of the different providers in every country, they get the transactions they like. That's this orchestration concept. So that if If in Guatemala you only like transactions that are above $500, then we can program that so that that happens. Or you only like clothing businesses, can give you that too. So that's where there's a lot of opportunity to continue to build in optimizing how not only where the way the money moves, who it moves to, and making sure that you've collected all the documentation to minimize holdups from a compliance perspective.
Absolutely interesting. And I mean, obviously Guatemala, one of the top receivers of money remittances in the world. How have you seen that level? And I know you're more in the ramp on and off in the blockchain crypto part, but how has that been the adoption? Because so far, obviously our countries are more recipients of cash, right, in these remittances. And but I think your proposition is really interesting. Tell us how you saw also this approach through better technology and blockchain into Guatemala.
Well, in Guatemala, I come from farming also. We produce coffee and as you said, the what? Cacao. Yeah, cacao. The people in the interior of the country still want the cash, and to pay our employees or for them to cut the coffee and everything, they didn't want even checks. Imagine we passed from cash to check, and it's bad because I always tell them you're losing money with inflation, and you need to what are you going to do with the cash? Are you going to invest it or are you going to waste it? And there are better ways that you can use the money for your family at the end, because at the end you always look for the good of your family. And with Invesgo, with this card, we have the simple card. This is a solution for them because they can use the card for payments. They can use the card with the Abra app. We're connected with the Abra app. They can use it for interest rates. They can use it to send money around the world in seconds. So this technology comes to improve the lives of the unbanked, to connect them around the world with anybody around the world, basically.
And obviously that process of educating the final consumer, especially in developing countries, to convince that the card has the same value as this wad of cash in your pocket, it's not easy. But I think it's a process, and I think it's a process that every industry went through. We all had cassettes and CDs, and I don't know anybody who has a CD at this point, right? So I think it is a process of that. And but now I want to go into a topic and maybe get your opinion on what do you think the biggest challenges are still in each one of your industries, and we'll start with Luis again.
I think for B2B, nowadays, the local currencies with low liquidity are the ones with the biggest challenge. Right now, you can do B2B payments anywhere between US, Europe, Australia, Japan, even China, in kind of like very fast way. But when we are talking about countries like Colombia, like Nigeria, like Thailand, where there is very low liquidity on that local currency, there is low demand, there we have a big challenge, right? Plus also regulators and countries having sometimes also currency controls on the country. So that stops also new investment coming into the country, right? So that's what we are trying to do as ASA, is trying to improve that liquidity management for companies to be able to deploy and invest in these local economies that they have been always slowed down by their governments, giving the option to have that local currency liquidity at any time, at any moment, right? I think from what I'm seeing, that's one of the biggest challenge. I think like we should focus more on the hard currency, the euro, dollar, and all this. Like we are trying to reinvent the wheel. I think right now we have very good capabilities, and I think we are seeing more and more. I think actually with blockchain and stable coins, we are seeing that also solved. But we are forgetting about actually 80% of the population in the world that they don't have exposure to those currencies, right?
And I think also the issue with liquidity is that demand for cash. Because if we started to go from a hard cash economy to now it's in your digital account, your bank account, or your wallet, and you go to the grocery store and you buy everything, there was no cash exchanging hands, then the liquidity really starts to diminish. But that's besides obviously the demand on each currency that they'll have, different countries have different currency issues. But what do you guys see? I mean, Logan, we'll start with you. What's your biggest challenge, or what do you see in your part of the business?
We're spending a lot of time on compliance. I think it's an opportunity. Others struggle a lot with it, and when you're talking about connecting the dots between whether it's two fintech and a bank, a fintech and a business, there's not going to be the same alignment and focus and definition on compliance and risk and what is risky, what's not risky. If it's risky, what do we need to address it? And so we spend a lot of time working closely with our partners and payout partners that have a certain background, or they look at compliance a certain way, and asking sometimes tough questions like, okay, this is on your yes list or your no list, and why? Or this, your threshold is this, but why? And in what situation can you say, can you move forward or say yes? And so that's where I think there's, it's a challenge, but something we've been able to have a lot of wins with, because it creates more opportunity when you can have the compliance team that is trying to be progressive and thoughtful towards looking for ways to serve new markets or expand their markets while also being safe and respectful to their own program.
Absolutely. I mean, regulations, no doubt.
Beyond not just regulation, because there's the regulations and there's also like the rules that you've written for your organization. And some people will sit in that role and they'll just say, well, it says here I can't do it, so I can't do it. Versus looking at having thought towards what if in what situation can we do it.
Can I ask you, like, how do you approach that in your company to be able to have like a compliance team that they are proactive and pro-business? Because it has been one of my challenges in all my career, so I want to know, like, how do you approach it?
One is by having compliance people that when we talk to them and when we consider bringing them on, that ask them questions around a business beyond just compliance, like how would they approach it? Another is when they're already in the role to think about the core, what are the core businesses we're serving now, or areas, what are those boundaries, and what would we need to widen those boundaries, to have them think about, hey, our goal is next year to be able to do transactions over $1 million. Right now, our limit is 100,000. So what would we need? Ask them the questions. Let them set forth onto that kind of journey, and then because if you tell them, hey, I want to do this, they might not have a great response. But if you say, in what situation can we do this? You tell me, and they might come back and ask for something crazy, something reasonable. But then you start a discussion. And if if the answer is just still no, they can't give you a process, then then that's a difficult people to have in your team.
And Sebastian, tell us a little bit. I mean, you're dealing in a very kind of like, I wouldn't say risky, but let's say on the higher risk, of course, because you're in blockchain and crypto. How has your experience been, at least in that aspect, in dealing, regulation in a country, even though you don't necessarily have a license for crypto, but in general, I think blockchain and crypto that have been playing a pretty significant role in cross-border payments in the last couple of years. You've seen it firsthand. How has the country, or how's your experience and challenges been?
It's been a challenge, certainly, and we even though we're not regulated, we act as if we are regulated. So we do, all of our clients have KYCs, we ask them proof of funds, proof of where the money comes from. And the biggest challenge was starting, because we need banks in order to operate. So the banks are basically allergic to crypto and blockchain. And they hear blockchain and they start running. So this was our biggest challenge to start. Fortunately, we hired a well-known law firm in Guatemala and in Central America, and a CPA firm as well, that helped us build the structure that we need to have in order to banks allow us to operate. So With the bank, we structured the company the form that they basically wanted to. So that's how we solved our problem. And to answer the last question, our biggest challenge or threat is basically the bad actors in the world, like they say FTX and other actors.
Exactly. Well, one of the players that you've been involved with, MasterCard and Visa as well. I mean, these are very traditional big companies that have paid attention to blockchain technology and crypto, and it's good to see that change. It's good to see that there is skepticism about crypto investment and Bitcoin and all these things, but at least the blockchain technology has really survived the test, and eventually we believe, in cross-border payments, that it could be really the alternative to, or the future of how everything is centralized in a different way that obviously is decentralized, but it's in a way that there's traceability of your funds, and yes, bad actors will always exist, but I think with more technology it is more difficult to do bad actions. I think it's easier to go find a compliance officer in some country and corrupt that person into allowing a transaction than to corrupt a blockchain system. It's really, so I believe that in technology. And I wanted to kind of open up a little bit of how you guys' experience has been with blockchain, and where do you see blockchain as the cross-border payments alternative?
Okay, let's spice this up a little bit. I don't agree with you that blockchain without crypto makes sense. Blockchain as a technology is old, it's not efficient, and it's just traceable. But you can do that with a normal ledger. I think crypto and blockchains goes together. That's what Satoshi Nakamoto did, and that's the future. All these, and we had the same debate in 2017, 2018 with like, blockchain is the future, it's not crypto. And after like 5 years, we are still seeing that there is no blockchain there without crypto that works, because there are better centralized systems, right? That right now there is better technology there. So yeah, just adding that to the debate. But in terms of like what we are seeing is the biggest, I think, change we have seen in the last 3 to 4 years. Before, we had a lot of companies settling with us in Bitcoin. And also, like, if you were seeing in 2016, 2017, 2018, everything was paired with Bitcoin, right? Like, you needed to trade Ethereum or any other altcoin. The pair was Bitcoin. Now, I think with the stablecoin, we are seeing a completely different scenario. And for us, that we use crypto as a settlement layer. We don't care about what you use. If you want to use Bitcoin, you use Bitcoin. If you use stablecoin, a stablecoin. What is important for us is the speed of it, right? And that's what right now blockchain is allowing us to do. So we have seen like completely twist between Bitcoin and stablecoins. We are seeing like 90% of the crypto companies that, or the companies that were using crypto as a settlement layer are now using a stablecoin. And also we are seeing a stablecoin as a part of the business that requires them to understand more the full technology, right? Like before, you were talking about Bitcoin and you knew or you don't know. Now, people are trying to get into, okay, how can I use a stablecoin? And then they can, learn about like other technologies. What is this stablecoin running on, right? Like, okay, a stablecoin runs through something. Is it through the Ethereum? Is it through a layer 1, layer 2, a side chain? But you have to go step by step. So I think a stablecoin is going to bring mass adoption. We are seeing in the B2B ecosystem. And I think it's the right way for new players to enter into the scenario. Yeah.
No, and actually that's exactly what I meant. Is Bitcoin became, to me, my personal opinion, for the wrong use as a an asset where you put your money and hope to make more money, as opposed to what now is being done with stablecoins, where you're using it to jump onto an alternative layer instead of Swift, let's just call it, but you're stable, you're pegged to something, and then you're down ramping somewhere else. So I think the future of blockchain, you're right, I think it is more associated with a stable coin, even if we just have to associate it with another currency that is not blockchain. But I think the initial adoption of Bitcoin kind of disturbed the attention of blockchain, and you're right, people don't see blockchain, they see Bitcoin, and Bitcoin suddenly generates, oh, is it wise to invest in Bitcoin? So the conversations for us who are in cross-border payments, when you mention Bitcoin, they simply go the wrong way. But I also believe that the difference is, if you send money through Swift or Wire, yes, you can trace the money where it goes. Once it leaves that account, once it goes into cash, you've lost it. It's gone, at least from the point of view of traceability. So I think there's a lot that we can eventually leverage on for security, and especially now that companies like Chainalysis are able to claw back certain things, certain monies that are, for bad use. But I think, yes, there is a lot of potential still in blockchain. I think it's really, and yes, 2018, 2017, everybody talked about blockchain. I think still early, and the adoption, at least as a company for us, the adoption that we've done is really mostly jumping onto stablecoins. For instance, we're part of Stellar, and Stellar has a lot more partnerships today than before. So I think that network of different operators around the world that are using the blockchain as an alternative to Swift is growing, and it will be more available, and I think eventually more options. How have you guys seen? I mean, you're cheating because you're already in blockchain, but now Logan, for instance, what is your view on using alternative banking rails?
Short answer is I'm open to it, but not seduced by it. Heard many protocols looking to disintermediate the banks, and there's too many of them to count now, and it's hard to see one of them like truly winning and throwing Swift to the trash. What we have learned is that there's lots of opportunity to serve at the intersection of traditional financial services and crypto-related entities. Lots of crypto-related entities, they know their business really well. They know how to make money, whether it's trading, staking, lending, all kinds of stuff. But eventually, end of the day, someone wants a quetzal, someone wants a peso, someone wants a dollar. How do you connect between those two, whether it's technology, compliance, customer service, like all these different things? Both those two, whether it's the banks, the fintechs, or the crypto companies, they don't all speak the same language or understand each other, and how to make it a really great user experience. And so we've gotten a lot of inbound because we understand how to, from a technology and compliance perspective, how to help value move through the ecosystem. So if somebody, doesn't matter, I don't care how, kind of what Luis was saying, how someone is receiving their value, whatever that value is. It could be dollars, quetzales, Ethereum, Pepe, I don't care, it doesn't matter. Just whatever that person wants, but the pipes need to all be connected, and so there's a big opportunity there, and we've played a small part in working with some of those firms. Even the biggest exchanges in the world, they can't pay out to their off ramp. They don't offer off ramp for most countries, except for stablecoin. Why is that? They don't. I know a lot of reasons why, but it's kind of shocking.
Well, probably also that. I always look at blockchain, or let's just call it now, how does it end up in the hands of a person that can actually transact? Probably similar to what Visa, MasterCard, did in the 70s. So here's a concept that is being reinvented in our day and age, and it is acceptability, but it's also network. How do you get that little shop in the corner to accept whatever coin? Bitcoin, Dogecoin, who knows, whatever they are willing to accept. And then the consumer, like you said, and you said, Luis, the consumer might, I don't care what they trade in, as long as it is acceptable and is reliable. But I also wanted to now expand a little bit of your experience, because I believe personally as a fintech that the partnerships that we can do across the world are strong. And I wanted to see kind of your point of view of how fintech world really comes together, and those partnerships can give you a much bigger picture or much bigger coverage.
Sure. Actually, I have a funny story. Last summer, the CEO of our company called me and said, like, Luis, you're becoming the head of partnership. I'm like, what the hell? Like, I'm the head of sales. Like, leave me alone with my thing. Like, I have a lot of work here. So, I mean, I built a couple of companies before, so I have done that, right? But I also know how difficult, but also rewarding and challengeful can be. So when I took the team, I'm starting to realize, like, every year it's becoming a completely key part of the business, right? Because you have the banks, you have the PSPs, you have the infrastructure, you have like the compliance partnerships, you have the you have also the last miles, you have the collections, you have high risk, low risk. It involves so much, and you become so interconnected that manage all those plus diversify risk from partnership, right? Before you were like, okay, I'm going to sign a partnership for Mexico, for example. But what about if that partner has a problem or your relationship is trying to go the wrong way? Right now for us, my main goal is to have like 4 or 5 partners per corridor, because that gives me options for leverage the relationship, so I can negotiate the price. I can also, with artificial intelligence, the API can see at the right moment what's the fastest route. With one partner, you only have one option, 1.5. You can see like, okay, this one is maybe 1 millisecond, the other one is 5 milliseconds. I can always choose at lifetime the right partner. But at the end, it's a big challenge. I have like more than right now 50 partners between bank and PSPs that I have to manage the relationship, manage their API, manage the integration. Any new update, you have to do a change there. So I think we are going to see the partnership team to become more and more important in every company. But at the same time, to be honest, I can also see firsthand the innovation, and I can see how new players are coming, bringing and challenging the existing one. And me as an entrepreneur is super rewarding to see that. So I'm glad I took that position. Super happy. But yeah, so far it's becoming a challenge because it's becoming more key as a part of the company.
No, and that's a really good point, that, you know, in a country or in a territory, you always want to have duplicity. You always want to have a second or third partner. And I think one of the things that we've learned from banks is that, you know, traditional banking might have one partner. And in fact, they might have even one partner globally. They might just switch through Citibank in the middle, and whoever can service them on the other side, that's it. So I think this can create competition. It can create better pricing, better experience, consistency. What have you guys, in the collaboration, what do you see that in terms of partnerships, global or local?
Well, partnership is key to expansion, right? Because I was telling you earlier before the panel that we expanded to Peru, and we did the dumb thing that we didn't partner with anybody there, and we wasted a lot of money that shouldn't have wasted. And if you partner with someone that's in the same world as you, and they know the local jurisdictions, the local law, the local regulations, and they save you a lot of time and a lot of money that at the end is going to make everything more efficient.
Absolutely.
Our partnerships is everything we do.
Yeah, that's right. Well, no, but you're essential. I mean, you're the connector.
Yeah, we're a connective layer between, you know, corporates and a global payout network. But the way I think about it is that in fintech, at least, the way you approach partnerships depends kind of if you have a fear of competition. If we're highly competitive in terms of just who we are as spirited people. But if I'm not concerned about other businesses that do 5% of what we do or 90% of what we do, I'm not competing. I don't look at that I think I'm competing with anyone. I'm trying to add value and provide value to the corporate customers that we serve and the payout partners that we are trying to connect them with. And so if I can collaborate with you here, that's great. Then we're helping the global kind of commerce ecosystem continue to move forward. There's plenty of folks that are, I don't want to talk about this. I don't want to share that. I'm not sure I want to work with you. Their concerns is more about what they don't have or what they can't achieve. And I think that I believe in any business I've done, like trying to build the best version of what we're trying to build and deliver that to the customer. And if we do that, then they won't have a reason to go somewhere else. We're providing enough value to them. And so that's the mental approach that I want to partner with everyone and take advantage of your strengths and deliver you value, revenue, transactions, whatever that metric is, so that we're both happy. And I'd rather have a few cents on many transactions and or a few cents on some transactions and zero on nothing. So let's do it together. But not everyone will feel like that, and that's their own strategy.
No, that's true. And at the end, each partner might have different risk appetite. You might want to service certain type of business with each one, and I think that is the advantage. I think that fintechs, wherever they are in different countries, have different segments and different strategies or risk appetite, as well as banks. All the banks also have different types of things, but I think that there's more flexibility in fintechs. But I think that's all the time to have. We want to open up maybe some questions from the audience. Anybody for our guest? No?
Puntos. Traditional will eventually, they will have to, but eventually link with the future, with CrossTech.
And there needs to be a lot of help in between to make a lot of that happen. You need companies that can speak the bank's languages. Their love languages are different than the crypto companies' love languages, and they don't always understand each other. And so there's technology or compliance or other vendors that are going to be kind of in between there, helping be that connective tissue. And even for Swift, they have a lot of opportunities to improve that can benefit all of us. It's a lot of it's a black box, and that they don't always even have the answers to. But they still have a place, and they will have a place. And you have Ripple and 20 other people like them that are trying to kick them out. But can you work with all of them? Probably not. You have to pick the ones that'll fit your business model.
Thank you.
All right. Well, thank you so much. Oh, wait, one more question.
In every panel that I've seen, there's always this the doubt that you have said that banks don't like any virtual assets, or they don't want to deal with the blockchain because it's like a scary question, right? But every fintech and every conference talks about these new technologies that we have to take and we have to take advantage of. But what do you think is missing for the banks and the compliance officers to accept blockchain as the new, because it's so transparent and you can have like all the traceability and you can see who is working with who, but they don't like it. What do you think is missing?
Education, basically, they need to get educated on the subject. They need to get confidence in the subject. So, in Guatemala, we always we work with Banco Industrial. We lecture them in blockchain and crypto every 6 months, something like that. We have a Zoom call with 5,000 employees talking to them about blockchain. So they're starting to get being open to the topic. And not only Banco Industrial, the Superintendencia de Bancos of Guatemala has reached out to us to talk to them about blockchain and crypto and teach them and also talk about regulation and everything like this. So it's slow. It's a slow process. It's very bureaucratic, but it's getting there.
Yeah, and also remember, banks are under a regulation. Each country has the banking regulation, and the banks sometimes are scared that, okay, if I start to go into this world, is the bank regulator going to come down on me? And I think it's both. It's familiarizing themselves with the technology so they're comfortable in the compliance, but also the local regulation has to be as well informed and easing the relationship with blockchain.
Yeah, I think there are two main reasons. One is what they mentioned. I think there is no framework or regulation still established that makes banks comfortable dealing with virtual assets. I think we are seeing the first real one with MiCA in Europe, with the MiCA 2. I think that's a good step. And then the second one is, I mean, how many times have we talked in this or other IMTC, before MTC, now CrossTech events about the risking? Banks don't want anything that is just a little bit above some risk level, right? We have talked about money transfer. Money transfer have existed forever, and still there are like maybe a couple of banks per country who deals with that. The other ones are not willing to do it, right? And there is a framework, there's regulation, there is everything. So I think we are going to see the same. We will see banks that they are more, they have more risk appetite for virtual assets. We will see banks that they will see the opportunity and integrate virtual assets within their portfolio, and we have already. And there will be new banks that actually they are crypto already, like on their backend, right? So crypto native, that's what I wanted to say. So yeah, I think those two things. So I don't see the ideal world where we're going to see banks adopting virtual currencies, because we haven't seen it on money transfer, and I've been in this industry forever. The risking part is so tiring, and I have been in so many like courts and processes with banks and the judge and all that, that I'm so over that. I need to find my right partner instead of trying to convince the ones that they don't want. Yeah, I think this is going to be the same with virtual assets.
Well, thank you. That's all the time we have.